Hi, this is Mark Carrington from mybitcoinprofits.com. This is our regular review on the Bitcoin price and Bitcoin markets. Remember our last discussion is we talked about the Bitcoin entering a triangle after the halving, and I asked the question about how long will this last. That was on July 25th. Well, let's have a look at, as always, what the markets are telling us, and let's see what lessons we can learn. So here is our chart. As always, we have the chart of Bitcoin against the US dollar. It's a daily chart, and we were talking on July 25th, which is over here, and the Bitcoin price was in the triangle. And we had a couple more days where it traded sideways, and then it has dropped out below the triangle. Now we sometimes have to wonder how these things are actually happening, because what we were expecting to happen is after the halving, with reducing supply, we were expecting some Bitcoin miners to be going out of business and the Bitcoin price to start moving. Let's just remind ourselves what happened after the last halving. So just pulling the chart across, this was the date of the halving, which was 28th of November 2012, and the price, this was the closing price, this blue line here at 12.15 was the closing price at the date of the halving, and you can see that at no time did price go below that level, and then it just tracked up, and in a period of 3.25 months, 3 months and 1 week, it had increased by 200%. So that's what market economics would suggest should happen. So if we draw the line of the closing price, this arrow here is the date of the halving. The closing price on the halving was 647.78. So I'm going to draw in my equivalent blue line at 647.48. And if we extend that out, you can see pretty well. We did have a few days where the price dropped below that after that, but that was certainly providing a foundation. Let's just change that so that it is actually coordinates. We said 647.48. Okay. So we were not expecting price to break down below that. So what's going on? Well, I did a little bit of Googling to see what was going on, and this, I just Googled Bitcoin meetings. I remember seeing this headline: Bitcoin's price falls as miners meet Bitcoin core developers. So that was 2 days ago, which is pretty well when that price fell off. Now this is probably a salutary time to remind all of my viewers that the Bitcoin market is an unregulated market. It is supposed to be operating as a decentralized market so that it cannot be controlled by particular groups of people. So a headline that says Bitcoin price falls as the miners meet Bitcoin core developers is somewhat contrary to the spirit of a decentralized blockchain mechanism. The reality is that the large Bitcoin miners, particularly the Chinese miners, have substantial influence over the way things go. And all one has to do is dig into the Reddit conversations. And I've just picked this one out here, which is been going over a couple of days. So it's in it's in response to this news item, and he says, this is business as usual. No one has been invited from the Bitcoin Unlimited or Bitcoin Classic team as far as is known. I assume just about every other consumer-facing business we're not inviting. So this is a meeting. It's supposedly referred to as a social event, and yet the price has moved quite dramatically. And these are the ones that Bitcoin price falls despite the recent halving, no less. The market obviously does not like these kinds of scaling, stalling meetings and agreements. Now, my read on all of this is that there are some issues that have to be resolved in the Bitcoin market and in the Bitcoin technology and the blockchain around the block size. What is happening here is that either the scared money is running away because they're concerned that they're not going to get resolution to the dispute or to the debate, or the price is actually being manipulated to drive out the little guys. And a reminder, again, this is an unregulated market, so there is nothing to stop individuals who are party to discussions to trading their Bitcoin. Yes, there's no one who can do anything about it. There is nothing to force people who have large blocks to declare what their ownership is, like we see in stock markets right across the world. So this is absolutely a market of buyer beware. And if we do not believe that this is true, all we have to do is to have a look at what's going on in the Ethereum market. So over the same time frame, we have an equally dramatic drop in the price. So whatever's going on in the Bitcoin market, the same sorts of things are happening in Ethereum. My understanding of what I've read in the Ethereum market is this has been a process of people buying alternate forms of this currency to try to destabilize Ethereum. So I've just typed into Google ETH versus ETC, and what I read is headlines like this. ETH versus ETC, what a mess. A large miner on Ethereum would just send Poloniex millions of ETC and then sell them for ETH versus Bitcoin and withdraw ETH Bitcoin, and then and it's just symptomatic of the industry that we're operating in. It is buyer beware. So as it happens, let's step back to say, well, what do we do about it? Because what you'll remember is, I said last time, my predisposition, notwithstanding the problems in the block size debate, is to be long Bitcoin, because I do believe Bitcoin is going to be around for a while. So, and I had drawn on the chart is that my preferred trading areas was the breakout onto this horizontal level of the monthly and to enter a trade long there, or to wait until the trade reached into the trading zone. And the trading zone is as defined by the Fibonacci from this low here up to the high. So the low before the halving and to the high directly before the halving. And guess what? We have now passed the 0.5 and we're on the 0.618 level, and it looks to me like it could well be an interesting level here. So if I just draw in a level here, joining those lows there, that low there, that low there, that low there is clearly a reversal for the 2 days before the halving, and we are in play for a trade. Again, let's have a look at indicators, the momentum indicators, just to see if we need to be wary of anything. And yes, we do need to be a little bit wary, because the MACD indicator has now crossed the 0 line and is now bearish. So I'd really want to be seeing a strong form of price reversal to enter a trade here. So, and then the quick reminders of what a price reversal price is. We get a price that does this today. So if we take yesterday's price, this is today's price. And then if we get a price tomorrow that does this, that is what would be an interesting trade. The next trade is if we take this as yesterday's price, and price is currently doing this, it is now taken out the low and does this, so there's no reason not to put a trade in above yesterday's high and go into the trade on a bullish engulfing bar. And then the last reversal, that is it's possible that it'll form, although I don't see a horizontal level here, so I'm not going to worry about a low test bar because I don't really have a horizontal level. So this is my preferred action, and quite happy to put a pending order in above yesterday's bar. And then the stop loss would go behind where this low currently is now. So that's the trading opportunity. So cautionary tale, and certainly pleased that I was on my hands while we waited for this price to break out of its triangle. It has broken out of the triangle. Now my bias is to be long. Now we could also consider the short trade, and for the sake of completeness, what we're looking for, given that we've now broken down, we're looking for it to pull back up here. And I think the level from the close at the halving is an interesting level because it does need to go back through there and to trade a short here. So I'd be looking for a reversal and to trade onto the underside of this trend line. So if we move the point of this trend line to where it's defined there, somewhere around there is a possible trade, but that's not a trade that I'm going to be interested in. Now if we just step across to the Ethereum market, again, we've got some shenanigans going on in the market, and I had identified the trade possibility following these cycles on this short-term trend line. Boom, 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 and I was looking to go long here, and it happened to coincide. What it's done, it is broken down, and it is now headed back to this level that we'd previously identified. So the trade opportunity is, I don't need that anymore. The trade opportunity is looking for the right form of reversal off of this line, because this line has been a very important line in the previous cycles. It's tested, and it's testing again today. The challenge on a trade here is that this is going to be, so you need to enter above yesterday's bar. It's going to be quite a large stop loss trade, so probably better to wait for this to trade a little bit like this for a couple of days, and then to wait for an entry with a smaller stop loss position somewhere above this line over the next couple of days. But you do need to watch that ETH versus ETC discussion, because this is an example of activity going on in an unregulated market that catch the unwary. So that's the review of Bitcoin and Ethereum trading opportunities. So my reminder then is looking for a reversal off of this level. However, I'm going to add something more. Do not be surprised to see the price move down to the 0.786. So finding that reversal is absolutely essential, because we do not know that this is not going to be heading all the way down here until we have confirmed reversal. So it may well turn on the 786, which is not an important horizontal level. It may well turn onto this horizontal level, which is drawn on the weekly, or possibly if I move this purple line to that sort of level is a possibility. So beware, be wary, happy trading and happy Bitcoining.